Hello, traders. It's 8 a.m. Chicago time on Wednesday, the 22nd of January, 2020. Thanks for joining me again. This is episode number 1676. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk on sentiment mainly driven, allegedly, I should say, driven by U.S. yields rising as earnings come in, and also there's less of a fear from this coronavirus out of China. The CDC, the agency that is responsible for disease control, Centers for Disease Control and Prevention here in the U.S., confirmed that the first U.S. case of the mysterious coronavirus that has sickened hundreds of people in China has occurred. There are 9 deaths in China as a result of it. China's being more proactive about controlling the virus. Not sure if that's what the market's responding to, but that's what where the credit goes. Who knows? Doesn't matter to us as traders, really. We just see that we have a risk-on sentiment today after selling off yesterday afternoon. We got within a couple ticks of all-time highs in the ES, and then we sold off in the RTH session. And now we are trading above the all-time high. We're trading at 33.32. The all-time high is at 33.30 and a quarter. Not much of a gap there. I would like to say the gap rules apply, but not seeing it, expecting a dip into the prior range to yesterday's range. So we'll see. We'll cover that in a minute. The leader today is a cable. The cable's trading at 131.60, up 0.67% on prices in the futures. The Nasdaq strong this morning, up 56.5 points or 0.62%. The Russell's also strong, 8.3, still trading under 1700. The Russell's had a hard time holding on to prices above 1700, but is trading at 8.4 points higher, 0.5% from settlement. S&P is up 12 and a quarter points, a pretty reasonably sized gap from the prior settlement, up 0.37%. The laggard today is crude. Crude has come off, is trading at 57.62. Crude is in a wide consolidation with an MC point of control at 58.50. An interesting profile trade in crude, in my opinion. It's really following very well the expectations when it comes to rotations in an auction. As you know, with crude, there isn't much news that has been coming out. Why is this loud like this? Guy's annoying. So there hasn't been any fundamental or macro news on crude, so it's kind of it's exploring both sides of the range very, very well. Let's move right into our review. One thing I'd like to add here is that you know, the numbers overnight really are mainly out of Canada, Great Britain. Nothing that is top tier. The Bank of Canada releases its rate decision at 10 Eastern, 9 Central. At the same time, we get existing home sales out of the U.S. And the only other thing that's in the way here is at 4:30 Eastern, we have the API crude stock change. And in Japan, balance of trade, which is a major number for that economy, expecting negative 124 billion yen. So that's, you know, the deck is clear in terms of what's scheduled. Here's what I expected yesterday. We were opening in a gap below Friday's all-time high session. We're opening in a gap, and the main expectation is that we are likely to push back into the range. As you can see on the screen in front of you, this was, of course, drawn 23 hours ago, as it says right here. This was before the session, and I expected that we are likely to participate upwards, and I expected us to push. The main target yesterday would have been the MC, not the MC point of control, but the point of control, the prior point of control from Friday, which was hovering around 33.24 and a half ish. And then if it's not able to hold that, the expectation is it would break through the 2650 double top that we put in at the IB high and begin to challenge that 30 and a quarter. Here's what actually happened. Just going to put it on the, man, I keep moving between computers, so these things get off. So what we had yesterday is really more of a drive. We had a bit of an open drive that immediately pushed an impulsive move to 7.5 points in the magnitude of 7.5 points, right back into the range. It was lower when the trader bite was going, and I talked about that 16.5 being that 16.5 being a key area. There was very clear structure, test structure overnight at 16.5. And basically, we opened right at 16.5, and boom, buyers just come in, blow right through the 19s, which was the low of Friday, filling in the gap zone. And so the expectation, I expected it to flutter a little bit around 21. At 21 and a half, the value low. This was a neutral day balance profile. Expected it to see some resistance there. It didn't. It pushed right through, and then we had a wider than expected rotation down once that buyer got done, and we proceeded to trade in pretty much a noisy kind of whipsaw environment until the initial balance was done, at which point we pushed into the key target on scenario 1 at 24.50. I have to tell you that this was a long on scenario 1 that was very, very difficult to hold on to unless you got in at the open, which I never do. It was very, very hard to hold on to, and to watch the main target materialize. Above there, 26.5 was the next key area. If we break through there in the next key reference, it goes to 26, pulls back to the close of Friday, and then pushes up, and then we miss the all-time high by 2 ticks before sellers step back in, and this creates the other opportunity for the day. A clear impulse down. You can see it pushing the bands here. Clear impulse down. So look for a weak push higher and find a spot to get short, and look for the extension. And the extension would target the developing point of control prior low at 19, which has been trampled on, and the open, and it ended up pushing to the open plus a tick before turning back and getting into the mid, the blue line. Fairly noisy operation yesterday. We have a normal variation day with the market closing inside of the IB, inside of value, and the value is valid yesterday. So between 18 and 23 was the sweet spot for this product yesterday. This morning we come in and we are trading a little bit higher. This is the overnight session. We come in, we have a standard reopen. The Asian markets open and they are positive, and then they push to 36.50, giving us a gap. Nice consolidation up there before it reverted back to the prior high and VWAP, which happened to be at the same price, bounce off of VWAP and the prior high, and then squeeze back into this odd looking point of control in the overnight session. Just a very odd looking profile, I have to say. It's P-shaped. There is some short covering very clearly in that we opened at the low end of the stem. We opened at the low end of the stem and pushed high enough to find sellers in the 36 area and have been consolidating sideways. This looks incomplete to me. We did not actually take out the high of the impulse. I'm expecting that to happen today. So today is pretty classic, I'd have to say, in terms of how we're setting up. This is a day where, frankly, it has paid off to stock pullbacks for a long, aiming for that 3650 high and then whatever reference levels you have or may use, depending on how you look at things. Let's take a look at what's happened in the order flow overnight. So there's the open back here. This is the open. And you could see there was just immediately, so I'm going to get rid of the prior range so we can get some color in here. This is how things are stacking. I mean, you can remember I talked about this, when was it, yesterday? I talked about how when things are stacked up above, the tendency is to work it's not like there's a, you could trade, you could write a trading plan around, how the book is stacked, but there's a tendency that it moves to size, and generally it's because I believe is it the chicken or the egg? Here, I think the size up above is an indication of the overall strength and intent of the participants in the market. And generally, I think it describes, and this is just me talking, um, I think it describes the liquidity that you see above, that I've highlighted here in this bracket. This speaks to positions already taken, in my opinion. Positions that have already been taken, and these are limit orders to exit those positions most likely. There's no reference up here, new all-time highs there, so there's no real reference up here. And so I'm expecting that it's likely to start to walk itself up there. Okay, any dip this morning is likely to flutter and likely to be bought, in my opinion. I would like to be wrong on that. I'd like the market to trade both ways, honestly. It's so much easier when the market's trading on both sides, because it gives us a chance to see how the auction's overall health is. It's hard to see that when it's just pushing one side and one side and one side and one side, constantly. So that's the order flow. The order flow is heaviest, coinciding with my stock zone in the 36, 37 area up to 38.50, and then it kicks back in at 33.40, and then we see a little bit of liquidity at 44, and then a lot of liquidity that's been stable at 50, which makes sense. 50 is a mid-century figure, a major strike price, so we expect this liquidity here to be there, just as we expect it down at 3,300 down here. In fact, let me show you. If I scroll down, oh, we don't see it. Oh, I'm wrong. Well, no, yeah, I'm wrong. It's odd. That's odd. I guess no expectation of going down there, but generally these mid-century figures get a lot of liquidity. So again, the book is weighted on the offer more than the bid. And that's just something to keep in mind. It's not a trading plan, but it is an interesting thing to note. In terms of what we're expecting for today, the overall picture starts us off with a gap in the gap zone here. And it's not very heavy. It's not a wide gap. The expectation is for an open auction that tests lower, and then look for a bounce, look for an aggressive push higher. I'm looking to push this 3650, consolidate in the 3775 area, and then start walking into that liquidity area above, before we probably will push through and push down on the close. Just another gap and go kind of day, kind of like this. Okay. One thing that's interesting, actually, I'm listening to Macro Voices, and this guy said something to me that was very interesting. He says, Warren Buffett is the kind of prize winner in terms of investors and investor performance, and he underperformed the S&P last year by a lot. Warren Buffett's fund, Berkshire Hathaway, had I think he said he underperformed by like 20%. But he says this has occurred in the past, here and there, I think once in the past. And he said the reason, but it only occurs in years where there are bubbles. And in his opinion, there's just a huge valuation bubble going on, and it's really difficult for fund managers currently because um, if you stay in it, given the relative size of the valuations, historically, if you stay in it, you risk losing uh, money for customers. And if you scale out, which this particular speaker, macro fund manager, is doing, if you scale out and go into cash or something else, then you're missing out on these 20% runs or whatever. So I think from that point of view, it's kind of interesting the dilemma that they have to deal with. Do I stay in this and keep buying and buying and buying and holding long, or do I flatten out, and if it continues higher, I'm going to look like an idiot. But if I stay in and I lose, then I lose those customers. So in either case, it's kind of a difficult situation. I can appreciate it, but I'm translating that into the OTF, the higher time frame, and what they have to deal with is the market gaps every day, and it just seems like it's being bought. The selling has been more aggressive lately. Like yesterday, some of that selling is just occurring kind of really on its own, which I expect to see more of. We have a good reason for the market to start kind of liquidating positions. The alternative scenario two is a squeeze higher that impulses down, consolidates at yesterday's high, and then starts making its way to 24, 25, and that is the key area to test. This 24 area is very clear. It's very clear that this area is the area of a lot of acceptance over the last couple of days. So that would be the target going lower. Being as we are at all-time highs in a gap, higher probability of open test drive, either down or up. In my opinion, open test down, drive up, consolidate, and then revert over. So scenario three would look something like this: open, test down, drive up, push, consolidate, and then roll right back over to the open and go sideways, rather than open, test, drive, and then continue pushing higher. We'll see how it goes. In either case, I'm favoring the longs here. I'm looking for a dip to buy on the open as the key play. If we fail to get to the overnight high and we roll over and get back into the range, I'm going to be tentatively, very cautiously selling and looking for 24 as a key target. We'll see what plays out today. Good luck. Always, always, always emphasize manage your risk first. Manage your risk first and let the trades run when they run. So our main plan is to figure out where our exit is before we enter. Once we accept this, we're able to relax into the trade and let these scenarios play out if they would. Good luck, and I'll catch you tomorrow morning. Take care.